here we have Bitcoin to start off the day. This is the day after, of course, the FOMC meeting where Jay Powell once again got on the old horn there and basically reiterated his stance. It was a little bit more of a hawkish sort of confirmation, essentially, in the sense that, rate hikes this year, 4 of which are, highly likely thus far. And, well, it's business as usual. So the rally that we saw to kind of start off yesterday from about 30, I think we were looking at a breakout just below $37,000 with targeted regions right around $39,000. That was fulfilled, but that happened before the FOMC meeting. So once the meeting came out, they reiterated those stances. Well, what do you expect? You expect basically Bitcoin to go back down to the lows as well as most markets, which is kind of what we're seeing right now. So that is the theory behind what we're going to be speaking about. Of course, at the end of the day, it's the technicals that I feel a lot more comfortable with because, well, that is something that actually gives me some way to validate or invalidate moves. But as you can see, those are the way that ranges will play alongside an event-driven market like we saw yesterday. So with that in mind, we're actually going to come back to the data over here on the Crown Trading application. Again, the open interest just been the fucking key golden player of the last few months here, keeping everyone safe in SAFU. And once again, it is, kind of suggesting that it's a bit of a risk off time right now, if you might say. Anyways, before we get into that, I also want to address this because it does still align with the likelihood that whilst Bitcoin does come back down, around the lows here, I don't think that Bitcoin, and I'll say this point blank period, I do not think that Bitcoin has the momentum nor the structure right now to essentially break to majorly new lows before first playing out a bit of a bounce. But right now we are still within the process of kind of unraveling yesterday's statement and likely playing a little bit lower in the medium. But if you look at funding rates right here, we can see that it's the most negative we've seen basically since the 4th of December, actually, where we got all the way to negative 0.05 actually. Right now it's negative 0.014. If we go down here to an hourly data feed, it's actually significantly less than that. So that is why I do like to look at the daily average to kind of get a better idea of what financing looks like. But this, very likely coincided with yesterday's essential short covering rally, and then what happens after that? Price action gets slammed back on down, and well, that's the name of the game, my friends. So let's go to the price action charts right here. Let's start off with where we left off yesterday. Essentially, we identified yesterday, or I guess it was more like 36 hours ago, not necessarily yesterday, but between Tuesday and Wednesday, essentially, we did have a bit of a short-term breakout above this 36,700 level right here. That did initiate targets up to this blue box territory right here. In fact, it was a little bit higher than that, somewhere around about 39 low, and we said, could go as far as about $40,000. We got just barely into it. That's fair enough. And then, of course, the event happened, and well, rejection and trend remains right here. So with that in mind, what else do we have going on right now? We actually will have hidden bearish divergence forming not on the 4 hour, but I believe maybe on the 6 hour or the 12 hour. Yeah, the 6 hour definitely does have it right there. Between this high over here and this high, presumably that we're putting in right now, that has not been necessarily it has been confirmed right here. And then the 12 hour, I believe as well, yes, it should have hidden bearish divergence between this breakdown level right here and kind of where we're at right now. Again, though, I do not think that Bitcoin has a good setup here for a major break to new lows. The reason why I say that is because we are seeing extremes here on 12-hour BBWP. We saw extremely high numbers here on daily BBWP, now officially getting into the 90 percentiles, a little bit more than that. I still want to see it get somewhere around 95 percentile, but that could come alongside another move down somewhere around our current lows, let's say 33.5 to 34-ish region. And at that point, I'd probably be looking for this one to get to the levels that we're looking for, comparable to what we saw in October, comparable to what we saw in December, comparable to what we saw in August as well. All of these actually coming at the culmination of some downside moves, actually except for the August one right there. But my point is that, we are already looking at extremes. We will also be looking at very likely bullish divergence building on the daily RSI here, our last low from the 22nd of January to get all the way down to a 20 read. So ultimately, if Bitcoin prints an even slightly lower low here, let's say we close the day anywhere below basically $35,000, you will be building up your first drives of bullish divergence. Very likely. On top of that, daily Joule has actually lost its downside curvature and is pointed up again right now. So whilst I do think Bitcoin probably has some more short-term downside here to go, I do not think that we have the momentum nor the volatility reads nor the setup to really break towards significantly new lows on a daily closing basis. So that brings up the question, actually let's go through the lower term time for momentum oscillators first here. And we can see that on the 4 hour, we are very likely freshly turning down. Yes, indeed we are. It's coming hard down below 38,750 right here. Bi hourly is going to be showing And what is going to be showing? Nothing, because it's loading right now. Again, come on, for the love of God. It's already way down there at 36,100 or so. And hourly, I believe, is flippy floppy, which is probably still down, but very, very aggressive right there below 35,900. Medium term time frame is going to be on the same side as the 4 hour, most likely. Yeah, 6 hour freshly coming down below 38.2. 12 hours also going to be turning down today on the next closure below 35,250, which Bitcoin is obviously above right now. So that will likely align with a very short term time frame continuation move. Again, somewhere around our current lows, maybe a little bit lower than that. But ultimately, I don't think that Bitcoin, again, with these reads right here, is setting up for like a major continuation move to the downside. Very likely looking at some major lows here, and then very likely rallies up into, middle of February. And then the real question is this a bull trap or not? As you can see, daily stochastic momentum will be to the upside as long as Bitcoin's closing above 34,150. So that does, align with, maybe a Bitcoin move back down around there, but ultimately momentum remains the upside as long as you're closing above there. So that is rather important. Buy daily, same thing, 36,550, very, very low. And of course, the 5-day, which we did close not last night, but the night before that, is currently at 35,300 as well. So realistically, over these next 5 to 10 days, I do believe strongly that Bitcoin's probably going to be putting in a major low somewhere we're at right now, after maybe re-exploring the current lows, and then very likely setting up for the major bounce, probably leading into like middle of February, maybe even late February. And then the real question is, does Bitcoin get above any one of the critical levels that could define a long-term reversal, meaning that Bitcoin is once again, trending bullish, and there is, well, I guess no major qualms with current price action, essentially correction over. And what would be required for that? Same thing as before. We took not a reverse, but we took a bearish Fibonacci retracement from the low side of the range to the high side of our range as well. And you can see that your traditional not bear trap, but bull trappy region between the 0.5 and the 618 right there. Let me put on log scale, which is actually, between 44,000 and about 48,000 would be your traditional sort of bull trappy region. So if I'm kind of mapping this one out over the next month or so, I still think it kind of follows our good old LARP lines over here. Maybe gives one more try to the downside. Maybe even comes down to the blue box right here just below. That's fine. But ultimately into February, something like this is probably what I'd be looking for, and then a turn down right around here. And then the question is, when it does turn down, do we get a higher low on a daily and by extension the weekly as well? Or does it fall on through $40,000 again? If you see it fall on through $40,000 again, assuming that this move even plays out to begin with, that's going to be my confirmation for, full on bear market, very likely spending, the next, 6 months or so in this range between about 45 and 30,000, and then might even break down to 25,000, which I do think is probably worst case scenario, to be honest with you, on this current move, if it does initiate long-term downside. And the hopium is that you do set in a higher low, just somewhere right around here above 40,000 bucks, and then you confirm that with a closure back above the 618, which is about 48,000 and some odd change. If you see something like that, it's balls to the walls again, or bulls to the walls again, whatever the fuck you want to call that in that case. And that would be quote unquote good. Until then, short-term timeframes are kind of where it's at right now, because the volatility is rather high. So that means ranges are rather large, and things move fucking fast. And that is exactly what we love to do as traders. So I want to once again bring up the long-term look on this, because I do think that there are technically more bearish things than bullish things, actually. And I do think that it's wise to be aware of these things, simply because we are going to be looking at a monthly time frame here. And the reason why I bring up the monthly time frame is because we're only a few days away from closing the month. So this becomes more and more relevant. And if we go over to our very higher term time frames, again, in this case, that's going to be the monthly, we will see monthly stochastic momentum turn to the downside officially with any sort of a closure, again, at the end of the month below 53,500. So that's rather far away. It's quite likely to happen. Bitcoin's a little bit less than $20,000 away from that price point right now. Have we seen crazier things than a 4-day $20,000 rally? We have, but those were in pretty ranging bull markets. So unlikely, I would say. Unlikely at this point, but hey, that's what would be required. And you can see the last thing that we actually turned down and lost specifically the bullish control zone was back on over here in February 2018. For the people who have been here for a while, you need no explanation of where that is, but that would be right here. That would be right fucking here, right? Before the next year or so, sideways and down in a very grinding and nasty market. On top of that, we can go over to this chart right here. We can pull up the monthly MACD. The monthly MACD will actually officially be crossing to the downside with any sort of a monthly closure below 40,750. And even in the histogram will just generally be falling below $54,000, which is kind of in line with the stochastic momentum as well. On top of that, we do see that the PMAR has lost the moving average on it. Now, we don't have too many iterations on this, so I'm kind of grasping at, at thin air here. But when we do align this with the the three prior MACD crosses to the downside, here on the monthly, and I should actually mark off this one as well because I didn't do that, but that would be in August 2014. You'll very quickly see why these are relevant because, well, this iteration over here from 2014 in August, you see pretty much the same price action that we're seeing right now, where with Bitcoin bouncing off the 20 simple, spends a couple months oscillating around there, rejection for the quarter following that basically, and then falls on through. And this doesn't look too much on a log scale, but make no mistake, from the actual signal given to the next low was 70% move, which is kind of nasty. Of course, we did see something similar over here in 2018. In June, monthly MACD officially crosses to the downside. From that price point to the next major lows, 55.5% down. Of course, we have another one over here right before the good old flu dump, or maybe not good old flu dump, but you get my meaning right there. And from wick high to wick low, about a 60% move from a closing basis. Certainly not as bad, to be fair. I mean, this was a bit of a out of the blue area, but still 30% move to the downside, as you can see. And then, of course, we're getting the same thing right in over here. Now, all of those prior signals were met with corrections down to the green 55 exponential moving average, which is why I do say worst case scenario is probably somewhere right around there. Currently speaking, that is trading at about 22,300 or so, and that will naturally rise up with each and every passing month. Obviously, it's a fucking average, right? And for the last few years, we've been spending a lot of time above that. So with that in mind, I do think that this is technically speaking a more there are more bearish things on the on the long term here, to be fair, and it is wise to represent this because, well, we need to be prepared for that. But what would actually initiate even that move to begin with, which I'd caution against blindly just looking for, well, it'd be the same thing over here, right? We need to see a weekly closure below the same regions that we saw over the summer, which would be just below about $30,000 or so on a weekly closing basis. Any sort of a daily closure below that first May drive down here in 2021 would also do it for me. That's 29,800. If one of those two conditions is met, yeah, I would be looking for a move somewhere down between about $22,000 and $25,000. Until then, I don't think that this is happening anytime soon. It might not even happen anytime at all, and that would be my validation for a move like that. In this case right here, again, we're more in a bouncy area than not for the short term. The question is, how far do we come down on this current drive before finding its footing again and trying for that next rally? It also should be known that we do have a technical formation in here as well, which is still valid, and it's also not on my damn charts, which is a problem. But there we go. That would be the good old head and shoulders right there, which does have an implied target all the way down basically to our summer lows. So if you are looking for a max washout target for this current move that we have, I do think that would be it. I don't think that's relevant for right now, and as I explained earlier, I don't think that Bitcoin really has the momentum to do that from here. I don't think it's going to be hit, basically, is what I'm saying, but I'll be wrong on that, or more importantly, you don't need to listen to me on that at all until Bitcoin closes an hourly delta below our current lows, or a daily below that first wick low that we saw over here on the 22nd of January. If one of those two things happens, yeah, probably going to see somewhere around $30,000, give or take a few bucks from there. But again, I am looking I want to be very deliberately clear with this, that I am looking from bounces from this region sooner rather than later, or I wouldn't say sooner rather than later, but I'm just looking for bounce from this region without really making any significantly new lows on a daily closing basis. Remember, we also came off the monthly over here as well, the monthly 21 exponential average, which is, a natural bouncy area, simply for the fact that the people who are playing bearish divergence on this call over here, which I thought was kind of an aggressive one, at least for myself. That first target down to $47,000 was relevant. The next one down to to the 21, a little bit more aggressive, at least in my opinion. So I did not play that. But in this case right here, what point was I making? In this case right here, motherfucker, man, I lost it right there. My apologies. It's Elsa's stupid laugh in the background. Sorry, I love your laugh, baby, but it didn't even throw me off. I'm just looking for excuses right now, and I'm blaming you. Anyways, I actually completely forgot where I was going with that one. Anyways, let me, Jesus Christ, I just lost my complete train of thought on that. Oh yes. Okay. So the 21, yeah, very, very likely that people are going to be closing their shorts if they did take this signal over here around that region, just taking profit, so that's kind of why it's a, a naturally bouncy region. And then on top of that, it was the quarterly backfill that we did see, sorry, not the quarterly weekly, but the quarterly backfill that we did see back on over from the reversal over the summer, that is. So these are very commonly bouncy regions. And to be fair, if I'm looking at the quarterly right here, I'm not necessarily bearish on the quarterly just yet. So I do want to represent all sides, the best way that I can. Ultimately, though, I do think that there still is hoping for this market. I do still think that Bitcoin in the next couple months here is probably going to either confirm or deny this hopium that we are looking for, which essentially is daily closures above $48,000. Essentially, what I'm saying and what this can all be boiled down to is that Bitcoin more likely to bounce over this next 2 to 3 week segment. I'd say the question is, does the bounce get above $48,000 or not? If it does on a daily closing basis, I will look at that as a confirmation that this is still long-term bullish. I wouldn't necessarily say that Bitcoin's going to bust on through and do some green dildo parties to new all-time highs exactly from there on that date, but it would set up the sort of criteria and the structure for very likely a new try towards at least 60,000, but probably new all-time highs, maybe at earliest around Q4 of this year, probably more like into 2023. We can see how all these things kind of work with each other. And of course, there's going to be a lot of, economic events along the way that are going to, play into that. On top of that, we also are coming off the bi-weekly 55 right here as well. So again, I do, no matter how bearish that you might be getting right now, I just don't think that Bitcoin has the momentum to break down from where we're at right now, nor the structure. So ultimately, another retest of the lows, completely fine. Just not looking for any closures, on significantly new lows, essentially, is kind of what I'm boiling the statement down towards. And what I really be looking for is the next big signal for the, I'd say semi-higher time frames, not necessarily macro, but getting there, would be the 5-day signal over here. It's just been so consistent coming off the same level. And we do see that it will officially turn up for the first time, basically since October. October, ever since end of October, early November, where Bitcoin actually made its all-time highs, it's been down. It's been very, very consistent with getting these moves. And that'll actually be turning up for the first time from the lowest level we've seen basically since when? Might be since ever, actually. Let me just double check over here. Let me see. No, the only time that we've been this low was actually December 2018, which December 2018 was, of course, the 3100 macro cycle lows from, the 2017 to 2018, biblical rally basically that we saw. So once that starts to turn, I do really start to look for Bitcoin to put in a big rally. I do think that relevant targets for that rally would very likely be somewhere between, at minimum, the 382 Fibonacci retracement, as we did look at over here, which is the $40,000 level. But personally speaking, I do think that's when you get your rally somewhere between the 0.5 and the 618. Everyone's going to get very, very bullish around that time, maybe for good reason. But I would say, personally speaking, hold off on bullishness from that move, presuming that all of this even happens to begin with, until Bitcoin either sets in a higher low above $40,000 or breaks down below. And if it breaks down below, then you're going to see Bear Crown get very excited yet again. Until then, I would actually still kind of refrain from my own long-term bearishness just yet. But we're talking about $10,000, $20,000. We're talking about $10,000 to $15,000 moves here. It's doesn't matter if you call that bullish or bearish. Look, this is why I think it's very, very important to understand that I come at this from the focus of a trader. So I don't really care what you call it. I'm just looking to trade these moves and looking for actionable, verifiable, tangible things to either validate these setups or invalidate them. And that's all that it comes down to. All that I care about is statistics and probabilities in this case. And at the end of the day, I actually don't really care what direction Bitcoin does go. It is nicer and easier when it goes up to the upside, no doubt about that. I'm not above admitting that. I'm certainly not above admitting that. But hey, I do think that this is going to be a long wait here at best. So hopefully that was helpful. There you go for Bitcoin, and nice.